What's going on, guys? Welcome back to another video. We have a lot to talk about in this update this evening. We're going to be talking a little bit about some of the interesting developments with the broad market, and as always, some of the most relevant pieces of news on your guys' favorite names, NEO, Sofi, Palantir, and HIMS, as well as the charts here to give you a better idea of what to expect in the short term. So before we get into all of that information, guys, if you guys do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot, spreading this information out to as many people who actually want to learn. And again, if you guys aren't subscribed yet, make sure you guys turn on notifications, hit that subscribe button so you're notified every time these videos do end up getting posted live. And massive shout out, as always, to all of the members of my private trading and investing community, Less Trades, More Profits. I'm going to throw up some of the gain screenshots here, guys, from some of the awesome trades that I've outlined for everybody over the last 2 weeks. And as you guys can see, it's pretty obvious at this point, you guys aren't going to see these types of gains anywhere else. Again, this is the best place to come in and learn to finally find the success that you guys deserve in the market here. If you guys are interested in coming to learn how to take these types of trades and really change your performance in the market, make sure you guys check out that link down below and use code July, because that'll get you 50% off your first month. It's literally only $1 a day. I'd love to have you guys in there showing you guys the actual proper way to go about the market every single day. So without further ado, let's get into everything. Kind of the first thing that we noticed here today, White House moving in the right direction with China. Again, nothing too crazy, but we are seeing some more of these positive developments across the board with trade as we get into this deadline. Now, one of the most important things that I want to talk about with you guys is this update on this chart of the dollar and what it means for the market moving forward here. As you guys all know, hopefully you've been paying attention to these YouTube videos here. Once we started to break all-time highs, it was very likely that we were going to start to see all of that foreign money that fled the United States in the first quarter of this year starting to come back. And what would that look like in the chart of the dollar? Well, we would see the dollar strengthen versus these other currencies here, and Dixie would end up moving to the upside, and that is what we have started to see, this nice trend shift in the dollar. But the most important chart here that everybody should start paying attention to, and this is one that I've outlined on Twitter a few times, is USD JPY. The yen is starting to aggressively weaken versus the dollar. So what does that actually mean? Well, if you think back to last year in that big unwinding of the carry trade, remember, Japanese interest rates are still very low and US interest rates are still relatively high. So if these investors want to go out and take out loans of Japanese yen, convert it to US dollars, effectively shorting the yen and longing the dollar, and then going into the US and buying US assets, whether that be treasuries or in a lot of cases US equities, they can then go and do that. And that is going to be reflected on this chart, obviously, by USD JPY moving to the upside. So this is something that I want everybody to pay attention to. If this does get out of hand and we do see USD JPY moving back up to this 158, 160 area, then the Bank of Japan might start to take action. But what this is really showing us is that there is going to be a lot of demand coming in for US assets across the board from foreign entities here, which again were heavily concentrated at some of the highest levels ever in 2024. So there could be a lot more of a sustained bid coming into the market from those market participants. So I hope everybody understands that. That is a very, very important element of this market right now. So let's get into some of these individual names here. NEO. NEO is having an absolutely awesome day here, currently up about 9% at the time that I'm currently recording this video, at about $4.92. Now, this launch of the Envo has done a lot better than some of these launches that NEO has done in the past here. We can see NEO Envo launches L90 flagship SUV with, quote, make or break pricing. The Envo L90 starts at $36,940, including the battery pack, with aggressive pricing clearly indicating NEO's high hopes for the model here. Now, this represents a further reduction of about 5% from the model's previously competitive pre-sale starting price of RMB 279,900 here. So everybody was really excited about the price point of this Envo L90, and it is this is a common trend that we see, that when these models actually do end up coming out, they're priced a little bit lower than what that initial number is in the overall marketplace, whether it be people going out and actually purchasing these vehicles or just the overall market. The equity market for NEO here is reacting very positively to this initial rollout of the Onvo L90, which is definitely a positive thing to see, especially given the fact that NIO is a luxury electric vehicle maker, and it's going to be very difficult for everyday normal people to be able to go out and justify spending all that money on some of NIO's flagship models. But having Onvo, having Firefly is really going to be what is going to be driving NIO's sales and revenue numbers and potentially some of these profitability metrics moving forward. Now, moving on here a little bit, let's talk a little bit about Sofi. And again, Sofi, another pretty positive reaction today. We are seeing Sofi up about 4%, even after that offering was announced earlier on this week, or that shelf offering. But as we can see here from Sofi Investor Relations, our registered offering is successfully closed. Sofi significantly strengthened its already strong position with greater strategic and financial flexibility. As discussed in connection with our Q2 2025 earnings release, Sofi's capital position was already adequate for our plans and more than adequate relative to our required capital ratios, which may beg the question, why raise more capital? Here is our perspective on what this additional capital means for Sofi and our members. This opportunistic capital raise is a proactive step to provide flexibility to pay down expensive debt and to further strengthen Sofi's ability to consider opportunistic acquisitions, though none are currently contemplated. Give Sofi an even stronger position for potentially greater growth, organic or inorganic, than we currently have planned and have communicated over the intermediate to long-term horizon. 3, increases Sofi's net cash position, and the additional net interest income from greater net cash would reduce interest expense, assuming a paydown of debt. As such, the combination is neutral to EPS. In essence, this additional capital will fuel continued innovation and growth as Sofi strives to help members get their money right. Thank you to shareholders for their support. And again, we are seeing some volatility off of this news here. And what I would say about Sofi right now in the short term, just looking at this chart, this is what I like to call a broken chart. After earnings, we have a big gap up, a push to the upside, a big gap down after that, after the offering, another big gap up after the announcement of the closing of the offering. This is one that you want to give a little bit of time, and still, this is not one that I would say is a really, really smart idea to buy right now in the short term. Again, I gave this one to you guys on the weekly breakout of $13.60, really at the end of May, beginning of June here, and that has been an absolutely awesome time to establish or add to that Sofi position that I know a lot of you guys already have. But right now, all you really need to do is sit back, relax, and watch price action if you want to, and really just continue to be thesis driven on your investment in this name. Now, next up, we have one of retail's most favorite names. Has performed very, very, very well for everybody over the last 2 years here, and that is Palantir. Now, we do have a very bullish short-term setup forming on Palantir near these highs, but this is one that obviously we are going to be staying away from because earnings are coming out on Monday. Now, when you listen to Citigroup here, they are looking at a pretty positive result from Palantir coming in, and I would expect that as well. Palantir earnings preview, Citi expects a revenue beat and shares to hit a new high. We are constructive on commercial fundamentals into Q2 results, Radke said in a report published on Wednesday. We expect a 2 to 3 point beat on revenue with upside to both government and commercial revenue consensus estimates. While the acceleration in government has been impressive, second half growth has a tougher compare. Now, again, he kind of has this neutral rating on Palantir stock, and in general here, with Palantir being as overvalued as it is, at some point, it doesn't mean that it's going to be happening now, but at some point, the overall market is going to start holding this name to a higher standard. You can't necessarily have these crazy valuations go on forever, especially given the fact that I believe Palantir would have to grow, I think it's at like a rate of 45% year over year for like the next 10 years in order to justify this valuation. Now, while that may be possible, that is relatively unlikely for a stock like this to continue that level of growth moving forward. So I would just say be a little careful here. Make sure that you are taking on the risk that fits your kind of investment horizon and your investment thesis, and just kind of be careful. But at the end of the day, this is not one that I would really go out and buy right now in the open market, but it is absolutely not one that I would want to go out and short. Now, last up on our list here, guys, for this video here, we have HIMS. Now, we're just going to be talking about the chart on HIMS here because, again, we do have earnings coming up on Monday, and this is going to be a good lesson for everybody. This is something that we talk a lot about in the streams every single day, whether it be the private streams that I do with the LTMP group or the public streams that I do for you guys here on YouTube every single day. Now, remember, HIMS was one that I was outlining for everybody near these April lows at $30 to $31 as a really good spot that if you wanted to initiate or add to a position, that was the spot to do it. But a lot of people were asking me up in these levels here, is this a great time to buy HIMS? Now, again, there is a time and a place for everything, guys, and you want to make sure that you are entering at the best risk to reward spots that you possibly can on any new additional purchases in the market. Now, that is a skill that hopefully you guys are seeing that you can learn pretty easily at this point. But recently, I was outlining this level for everybody at about 53.24 on HIMS as being that level that if we were to break to the upside, this could be a really strong short-term trade or even a nice spot to either add to the position if you want to or initiate a position if you missed it down in the 30s. Now, this is one that we were talking about in the YouTube videos on the streams here as well. And as you guys can see on the chart here, this one ended up playing out perfectly. Now, kind of coming into today here, that would have been kind of that last take profit area for those of you guys that are looking to short-term or trade this in the short term here. But for those of you guys that are long-term investors, obviously I think HIMS is going to continue to have success. It is obviously going to be a name that is going to have a lot of volatility in the short term, but as long as they can hit the goals that they're laying out for investors, everything should be fine. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot, spreading this information out to as many people who actually want to learn. And again, if you're not subscribed yet, make sure you guys are and turn on notifications so you're notified every time these videos do end up getting posted live. But until next time, guys, I will see you. Peace.